Hi, everyone. Welcome to another market talk. 2 weeks have passed, and what 2 weeks it has been. So today we had this great rally. Correlation risk is still very low. Momentum is positive. So I'm very interesting to hear what today's participants have to say. I'm sure we will hear different opinions about what's going on and what can happen next. So yeah, let's start. So maybe today we will start from Ted. So Ted, how are you? What are you trading and what you see in the market?
Yeah, thanks for having me on again, Brian. It's good to be here and see you guys. Let me share my screen. I have a very quick presentation, and I'll just sort of frame things for you. Let's see. I need to. Okay. Wait. Bear with me 1 second. That says disabled. Hold on.
Yeah, I need to. Okay.
Good. Okay. All right. Let me just see. Share my screen. Oops. That's not what you want. This. Okay. So what I'll do is just run through my trading process, touch on my macro regime very briefly, look at some market signals, and then share what my positioning is. So starting with sort of a U.S.-centric view, what's up with U.S. growth and inflation? So what we've seen recently as inflation has come down a little bit, we've seen the level of growth start to rise again. This is the Atlanta Fed's GDP now, a real GDP estimate for Q1. And you can see it really peaked out here in the mid-March timeframe, just after actually the banking crisis occurred, and has since come down. And then on yesterday's CPI report, they actually adjusted it upwards. So based on their estimates, we've got a plus 2.2% for Q1 GDP. So that's since the beginning of the year, we've seen sort of a steady rise. This is blue chip consensus. This is the GDP nowcast, plus 2.2. So we have a growth situation, at least in terms of these estimates. We also have inflation starting to come down pretty dramatically. This is a chart that was put out also by the Federal Reserve Bank, of Atlanta. Oh goodness, let's just see. Okay, and this is sticky price CPI. And what you can see here is that inflation, sticky CPI has come down 4.7%. This is month over month from 6.8% last month. So a pretty dramatic decrease in the amount of inflation, at least in terms of that sticky CPI. And there's been a lot of talk about, the stickiness of our inflation, but that does seem to be rolling over at this point in time pretty dramatically. Tier 1 Alpha put out an interesting chart the other day that I thought might be relevant. This came out on Tuesday, and it shows the US CPI year over year gain and in relation to money supply, which they're using M2 as a broad measure of supply of money in the market. And you can see in 2020, this accelerated rapidly as basically we engaged in modern monetary theory, and the federal government spent trillions of dollars and the Federal Reserve monetized it. Well, that started to come down pretty dramatically, and in fact, it has decelerated at the most rapid rate ever. And you can see also that CPI, and again, this came out before Wednesday's report. This CPI has started to come down and track this M2. So we clearly have a situation where both growth is at least holding its own in the United States, and inflation has started to come down. From a policy point of view, in terms of the probability of the Federal Reserve continuing to hike, it went to a 64% probability after yesterday's CPI report, down a little bit from, I think it was 72% just prior to that. So we can see that the expectations are probably for one more hike of interest rates in the May period. And we also have heard that from Powell and others that the banking crisis and the lack of liquidity that has taken place in that space has served as anywhere from a 75 basis point to a 100 basis point cut I'm sorry, hike in the interest rates. We really haven't seen that start to factor through our economy at this point. So there is some lag associated with that. So the question to me is, are we really back to Goldilocks? I got a hard time with that. So when I look at it from a trend basis, this happens to be a correlation chart, and I'm looking, this is a 3-month trend basis. It's actually 55 trading days from January 19th of 2023 through yesterday. And just looking at what's happening with various asset classes. We've got the dollar that's in a neutral phase. We've got long bonds, neutral-ish to maybe negative. We have short-term bonds, neutral-ish. And yet we have, SPY, which actually tacked on another, 1.45% today, up 4.6% through yesterday. We have gold that continues to perform very positively. Agricultural commodities, yet base metals, which is largely has a copper position in this DPB, is decidedly negative and really kind of flies in the face of the growth story. And DBE, which is the energy fund, has started to actually improve. That has come up pretty considerably, and I've actually added a position this week in DBE. You can see in the WTI chart that we've started to put in positive price momentum and take out that 80 level that has sort of served as the top end of the range. I also track managed futures just as a tracker. So I have a hard time with this whole scenario of it being Goldilocks. I keep looking at this chart. It's a 10-year, 3-month inversion. It actually this morning hit minus 176 basis points. This time series runs all the way back to 1982. It has preceded every recession at 100%. The lag period is anywhere from 12 to 18 months, but you can see we're clearly in a deep inversion. This is real trouble for our banking sector. We have the long end of the market screaming for a reduction in interest rates, yet we have a Federal Reserve that continues to hold that short end very high. I think the 3-month bill today was up over 5%. So in my mind, we have a recession. In fact, the Federal Reserve minutes yesterday, the staff called for a mild recession. I don't know how the group feels about that, but I think we think mild is probably unlikely. And then we also have happens to be a FactSet Q1 earnings report. They're projecting minus 6.8% year over year in terms of S&P 500 earnings. We have seen as earnings start to come down as we move into a recession, we really haven't seen that priced into the market. In fact, what we've seen is just the opposite. Market seems to want to be bullish. So with that, I am basically sitting on the sidelines for the most part. I'll share my positioning. I've got 85% in bills. This is 3-month treasury bills. I'm getting paid 5% to basically sit there and eat popcorn. And I'm going to, because I still think that this is that we have a reckoning coming. I am not outright shorting, except I've got a small position in SH, which is short S&P 500. Against that, I have a long of EWW, which is Mexico, which has performed really well. I have a small position I've started in DBE. I actually opened up a position this morning when UUP, which is the dollar index, hit the low end of my range, and looked like a good buy at 27. What was it? 47, I think. And then I'm holding this VIX. I'm planning VIX-M, medium-term VIX futures. I'll be, once we hit the 16 level that we may get to, I will be adding to this position. I actually had a bigger SJB, which is short HYG position, that I've taken down as it started to run in the opposite direction for me. So that's basically where I am, sitting on the sidelines, eating popcorn, and getting paid 5% basically to wait and see what happens.
Yeah, sitting on the sidelines is not a bad idea for sure. maybe Matteo. So first of all, nice to meet you. I think it's the first time we talk to each other. So what you see in markets, what are you trading, and what are your views?
Nice to meet you. It's been a pleasure to be here again. Looking at the equities, which are my main point of focus, they are again pricing in two things that cannot exist together because they are pricing in growth and at the same time cuts, which is pretty strange because if you have cuts, you don't have growth, and if you have growth, you have no reason to have cuts. So that's strange. Tech is leading. The Nasdaq has been up over 20% since the December low, and it has been moved up mainly by the generals, so big tech such as Amazon, Apple, Nvidia, Microsoft, etc. Despite the fundamentals of these companies deteriorating very, very fast, we saw, especially in the semiconductor sector, there have been plenty of bad news regarding demand, which is weakening. We saw that from TSMC, that had lower sales. We saw that from Samsung and from Micron, that more or less showed the same, missing the expectations. And the fact that there is some demand weakening in the semiconductor sectors means two things. The first one is that semiconductors are highly cyclical. So if the demand for a highly cyclical sector is weakening, it means that the economy isn't so strong as we expect. The second one is that many companies, such as, well, of course, Nvidia, AMD, and Intel, because they design chips, but also the other cloud companies such as Apple, Amazon, and well, Google, they are going to suffer both on the top line and the bottom line because the lower demand from semiconductors is mainly them placing a lower fewer orders to the producing factories. So that's it for semiconductors. I saw that the semiconductor sector has lost its momentum. It peaked a few sessions ago, and that's usually leading indicator for the Nasdaq, and then of course for the other indices. So that's good for my positions at least. And moving to the other indices, I mean, there have been some pretty strange moves in Europe that I can't explain. The CAC reached an all-time high. The DAX is a few percentage points from an all-time high as well. And the euro yesterday hit the 1.10 again. And to me, it's completely absurd because the only reason for the euro to go up this much is that the ECB will keep hiking more than the Fed, and that's just not going to happen because there are some structural limits to Europe. And if the ECB continues to hike and tries to out-hawk the Fed, you have two possible outcomes. The first one is a severe recession. The second one is a sovereign debt crisis. And I don't see how that can be bullish for European equities or for the euro. Also, the fact that we saw last year that the dollar going up had some negative impacts on the net earnings of the American companies because they were earning revenues mostly from outside the United States. And I think that we'll see something like this in the European equities as well, because there needs to be a point on which the euro being so strong damages the earnings of European companies that are international as a revenue. Moving to macro, I think that the Fed will continue to hike. All the data that we saw recently suggests that the Fed will continue to hike, and there is some possibility for a pause, but not before at least two others 25 basis point hikes, in my opinion. I stand by the idea that we won't see any cut this year. And regarding the most recent data, we saw yesterday the CPI that was cooler on the headline, mostly because of lower energy, but it was still very, very much hot on the core that was growing up 0.4%, and the super core was 0.4% as well. So this is not something very bullish for equities, because it means that inflation is very sticky. And since the energy, like oil, went up a lot in March, I think that next print will reflect the higher energy costs. And if you look at the PPI of today, PPI was down negative, actually, mostly because of energy and services. Energy will be offset the next month, and services being down, if you combine that data point with the labor market that is weakening, is a recessionary sign, in my opinion. And finally, to conclude, in yesterday minutes from the last FOMC, we saw that the Fed expected to see a recession later this year. And given that the Fed doesn't have a good history at predicting recessions, I think that the only reason they see a recession coming up is that either we are already in a recession, or most probably the recession is so severe that even the Fed can see it. And that's pretty much all I think about the markets.
Yeah, definitely. That doesn't have a good history. Okay, Raphael, impress us.
Hey guys, so yeah, mild recession like 1929, you know. So yeah, I'm gonna share my screen now. Up. Okay. So so last time I was on. Okay, just let me check if I'm sharing the right stuff. Yeah. Last time I was on was I think a month ago, and it was when volatility of VIX was actually quite low, and yeah, it was actually quite low, and the bears actually fumbled the ball. I mean, they missed the opportunity to have the VIX rip that we were all hoping for, and since then volatility of VIX just ripped. So you had actually this place was the time when at least for myself the new bear market rally started. Some may call it chop. I just call it BMR. It's much simpler. So it was basically in the middle of March. That was the time when you could deleverage, or at least consider that we were entering another phase again in this chop that has been lasted for now almost a year. So now looking at the VIX currently, I'm actually pretty scared, because we are at 1780, 81 to be exact. And the setup usually that I mentioned previously is to get the trade to reach trend, and we are quite far off this place. So I mean, we were talking before the show saying that VIX 16 looks more and more certain, and I'm actually quite scared that we could get to a lower point. If you look at, for example, at my fractal range current setup, the upside downside ratio is terrifying for VIX, right? You have a 10% downside and only 5% upside, meaning that the trend that we have seen, vola being crushed, can continue. So that's regarding VIX. Now regarding dollar. So months ago I mentioned I didn't like the setup with trade being below trend, which is usually bearish. And what happened was, yeah, it was bearish. So DXY just started to go down, and it switched trend also on MFR. It switched yeah, I can see it must be, I cannot see it, I don't know why, but yeah, switch around the same time. Maybe if I can address this later on. And now the scary part is the current Vola setup is actually looking like the one we had in November 22, just before the DXY got wrecked. So now it's looking quite scary. Are we about to get a Vola spike, or will something happen to save the dollar? So you've heard these past 2 weeks the dollar defender come to the forefront about what's going on in terms of international stuff. But what we are seeing is DXY just keeps going down, and the Fed doesn't seem to be interested to defend it so far. So of course I'm monitoring that, because that's not a good sign also for the bear, at least for now. Euro USD, so it's literally the inverse. You had the chance here with Vola rising, and yeah, middle of March Vola topped and started to go back down. Of course, volatility going down is good for Euro USD, so Euro USD is going up. So the level I shorted today is actually a big level. So I would expect some resistance there. If not, then we are on for the same setup that we had before, waiting for trade to get back to the minimum it should go to before being interesting to short again. So same, it's not looking very encouraging. VIX, DXY, Euro USD, they all look the same. Like we are just maybe middle of this bear market rally. Then I will go to US 500. So US 500 actually looks a little bit more encouraging. So for now, it's not yet overbought. So that would be better, because every top before has been at least marked by an overbought signal, which we are not getting. My matrix signal is also not triggering yet. So we are not in extreme setup. I got a sell signal at the beginning of April. I executed on this one end of March and the beginning of April. But since then, I have not added. One main reason being all the signals I have mentioned before. Another one is on MFR, you started to see the upside downside ratio started to go above 1. So you can see, for example, today, even after the move we had, the upside downside ratio is still quite big. Same for NDX. So yeah, that's another reason that yeah, maybe it's better to wait to go directly to add shorts. I would expect at least to get a mega sell, before coming back. Another reason, and I think Vi will mention this one, is the correlations. Correlations are a mess. They've been a mess since the past like 2 weeks. There is decorrelation between the different markets, asset classes, and also the correlation between bonds and stocks is not favoring the bear side, as we want to have positive correlation increasing and going to extreme. And for now, you can see it's not going there at all. So maybe tomorrow it will improve. I don't know, but for now it's not encouraging as well. So I'll be waiting. Maybe you have seen I have not shorted equities since I did it end of March for volatility reason. And the reason why I'm not adding is what I have addressed before for VIX, DXY, for correlation, upside downside. It's not good. Another asset I was watching is oil. So oil, I got a buy signal on the 20th of March, which was actually the low, and I'm starting to get some sell and mega sell signal right here. So Now the question is oil gonna sell off and go back down, or are we gonna get some kind of price action that we had in January to February 22, leading to the crazy spike up in oil? So considering what we are seeing in dollar, with dollar just going down, and now we are seeing oil going up, I would be surprised that the Fed would let US oil, but some other commodities that were mentioned by Matteo, for instance, just rip, because that would mean that inflation would come back and basically erase all the job that was done. Do the Fed really want that? I don't think so. So maybe something that would stop the dollar is the concern that the Fed would have if they see commodities starting to rally and triggering another wave of inflation, which I would bet they don't want. So we shall see. I'm not touching, but I'm watching. My opinion is that I think we're gonna get a blow off top, but yeah, let's see. That will force the end of the Fed. Then going to Bitcoin. So Bitcoin is there in terms of daily vol. We are the mean. So mean is I've explained this before in the previous shows. Mean is the place where volatility is so compressed that at some point volatility has to rise. So I use trade. Trade will compress the volatility itself. It will reach a minimum, and then vola will have to rise just to give some breathing room to trade, so that we can keep going higher, or just vola will just rise, and the equity, the asset will just crumble. So it's there in terms of vola. I'm watching the levels above 31 to 33K. I can see also that MFR is agreeing with my view, with the top of the range being at 31, the upside downside being well below 1, even the long-term upside downside also well below 1. So I'm waiting. I may use Vito, I may use another product, but I'm certainly considering shorting Bitcoin. And finally, regarding yield, so my base case remains the same. I believe we're gonna go higher for longer. I believe the Fed raising rate cycle is not over, tightening cycle is not over. So for me, the price action that we are seeing now, for example, this is the US 2-year. This was the first time that the US 2-year broke trend since we started this cycle in October. But I think it's just an episode. I think here we are just in a range trading, but then we're gonna reclaim and we're gonna go back higher. US 10-year for me is the same. So yeah, I'm expecting the same. We are just holding lower, and at some point we're gonna go higher. For now, when I look at MFR, for sure the trend is bearish on most, neutral on the 1 year, but the upside downside is not very favorable to bears, and long term also is not very favorable to bears. So I would guess that the moment of truth is approaching, and yeah, this is my opinion. Will it be the dollar just keep going lower, the commodity prices keep going higher, that will trigger the Fed to act? I don't know, but I'm expecting the Fed to do something. Yeah, that's it.
So actually, SPX had a upside downside ratio of above 3 after the open. Yeah, so now it's 1.8, but it was above 3, so it worked very well. Also, I want to address that, in my opinion, bear market rally is not the same as chop. At least that's how I interpret things.
So where are we, Vi? Are we in a bear market rally or in chop now, in your opinion?
We are in bear market rally for the last 1 week or so. Before that, 2 weeks we were in a chop, something like that. Yeah, but the main difference is both we have low correlations, but when we see a directional move in one direction, strong move, so this time it's up move, but with a big volatility, so it means hers are lowering, but big volatility, I mean that market is still going up, but during the day you get this, 20 points down, 20 points up, 20 points up. But if it's stable, I mean every day it goes up, the trend is quite clear, it's BMR. When it's chop, you get like a range bound action, basically. Yeah, but it has a lot of similarities, so of course correlation is one of them. Well, at least that's how I think of those. Okay, so now it's my turn, I think. So yeah, let's have some fun. So what happened last week that was not well, normal, let's call it not normal, or yeah, so average sector correlations dropped in one day. Basically they dropped from it was like 0.76 to 0.30. I mean, which is basically, it was a crazy thing. Then it went up for a couple of days, and now it's today it did decreased again. So I'm watching those short-term correlations across different periods and what's going on, and basically the only message from it was, okay, I really want to short futures or SPY or other equities, but I just can't do that because, of course, the goal is always to front run the signal. That's what I tried to do, but the front running was still not there because we have a bullish trend, positive momentums. Today I will not even talk about momentum scores because, well, it's not surprising. They are positive. So if we are planning to short the market, so momentum scores are not in our favor. But for those who played this move up, like Brian and others, yeah. So it was a great trade, and momentum fully agreed on that. I was not on the long side. I was sitting in cash, but today I will talk about some positions because actually today I opened a couple of new positions. But yeah, so when I saw those correlations across different time frames, I thought, okay, I can short it. I just need to watch until that risk will go up, because with such low correlation, risk market is just ripping in the face. And actually that's what we see. So first we will talk about average correlations. So we saw 5 day, 10 days, same situation, and basically they are relatively low, currently at 0.59, very low. If we go to 30 days, also this blue line, I mean 76 is a relatively low level for this regime. Of course, let's call it at the bottom of first real bear market move. Those were quite lower, so we're still not there, and that's worth to consider. But if we're talking about just this regime in general, where we are now, after those bearish moves were over, basically it's relatively low. So I want those to go up, and I was speaking about that 2 weeks ago, and of course, as we can see, we are not there. So from correlations perspective, and also just to always remind myself that, of course, historical volatility for SPY is very low. So concerning thing. So what I did today, actually, I bought June SPY puts out of the money because I thought, okay, even if VIX goes to 16, I think that if VIX goes to 16, it will happen soon. It means in a week or two, no more. I don't expect this to last for months. So I thought, okay, so even if VIX goes to 16 or 17, whatever, at those wall prices, puts were attractive, so I bought puts. And also I shorted 6E, which is euro dollar futures. So yeah, I like futures just because it's cheaper on a margin based on volatility, and also trading hours, commissions, and everything. I always prefer options and futures versus some other tools. And especially with currency. So for those who trade Forex, they pay those swap fees, overnight holding fees, and so on. So I will always choose futures. So I shorted 6E. So that's my another position. From the signal perspective, yeah, I can do it very quickly. Correlations are low. If they continue to go lower, this rally can last longer when we want. But if I see correlations going, starting to go up, it will be a good signal maybe to start shorting outright other products that are, of course, highly correlated to SPY. So yeah, I have a lot of things in my watch list, but the signal is not there. Ranges across the board are not supporting anything on a short side if we're talking about equities. So basically, yeah, correct. So in the things what I do, yeah, XLE still has high upside downside ratio, but based on its correlations and other signals, I think that this move is will not last for long. But the main things, so SPY below 1 XLU. XLU, actually, I will show you in a couple of minutes. XLU has negative correlation to SPY and IWM and others, so it's also worth mentioning. But yeah, tech, of course, to the moon. So I don't see a lot of opportunities to short equities here. I want to go to spreads. Today I will talk about some spreads, and I will show some correlation charts of those, because actually there was a question from a person. He is trading XLE IWM, XLU IWM spreads, I believe, and he just wanted me to address those things. So I will try to do that. So first of all, I will start with correlations, and I will start with XLE IWM correlations. So what we have here, yeah. One moment. Okay, so 10-day IWM XLE correlations. First of all, so we can see how those assets are correlated in the short term on a historical basis. So currently it's 0.2 positive. It was negative, but the mean is somewhere around 0.4, 0.5. So on a short-term basis, those two are not really highly correlated. And on a 30-day basis, we have a bit a different story. So correlations are, of course, higher, and they are moving up. So for those, for this spread, that's not what I want to see. So my advice would be always monitor correlations of those two assets you want to trade, not only the spread itself, trends, ranges, or something, but the correlations, because I believe the first idea was to play interest rates with this spread, but yeah, like I said in a chat, that I mean, XLE lives a separate life, and you don't want to play general macro unless, of course, it's inflation. General macro with that. Yeah, so just a 90-day correlation. So now I will show you why I like XLU IWM more. because this thing is totally has a totally different correlation profiles. The mean is about 0.3, something like that, 0.3, 0.35, but currently it's negative, and it's not only negative, but it fell sharply. So for that spread, of course, if you are on the right direction of that spread, for that spread, it's a very positive thing, and it's a tradable spread. That's why, for example, I would never trade things like XLE with things like SPY or IWM or because a lot of different factors are in play. So basically, XLU IWM correlations are falling for quite a long time. They peaked in September, October in this move, and now we're going down again. So watch that. So yeah, sorry for those who are not interested in those spreads. Yeah, but I had a question, so of course I need to address that. And here are the ranges. So XLU IWM, bullish trend and positive upside downside ratio. XLE IWM on the other hand is a bit bullish trend and 2.225 upside downside ratio. So now these spreads are bullish and both have quite a good upside downside ratio, but wait a second, sorry. Yeah, but okay, this is quite a interesting range, and the Hurst exponent is not really high for a spread. Always watch the Hurst exponents of the assets you want to trade, especially for longer term. So swing trading, because especially for a spread, for 3-month Hurst of 0.68 is not that big actually. And if we come back to XLU IWM chart, we will see a bit different picture. That's why I also like it in this cycle. And keep in mind that it's based on cycle, because in a general bear market or bull market where things are normal and market is trading in a normal, I mean, it's just doing normal things, that spread would not be interesting. Yeah, but watch that Hurst exponent. So yeah, that's what I wanted to show. So I hope I answered that question. And yeah, I would never trade things like energy related ETFs, even though it's equity ETF. So of course it has stock risk in it, but this thing just doesn't move in the same way as other sectors or indices move. So I don't think that it's a great pair. Okay, yeah. So sorry for that. Hope it helped, but basically what I wanted to tell in conclusion that yeah, even though I have now both SPY puts and shorting euros, so basically long dollars, but I still don't see. It's still very small positions, and I don't see good signals for now to be more aggressive in the market. So yeah, with those correlations at those levels, my advice would be monitor them, monitor Hurst exponents and momentum, and also of course never go against the trend, because statistically going against the trend is not a good idea. Yeah, so that's it from me for now. So
we don't have any questions.
I have a question. I have a question, Raphael, regarding your energy USO and the volatility profile of that. What are you seeing there, and what is it suggesting to you?
Okay, let me check. I will share again.
I noticed it took out, or at least the OBX took out the March 6th low. March 6th, I think, was a good
So
spot to sell, but
so basically, the way volatility works is if it's a one-time event, you're gonna get this kind of volatility profile, like dip goes to 0 and then back up. So basically, here, very good place to short because it's a one-time event and then back up. So for example, this place. So now the problem is we don't know, right? We get the extreme to extreme in terms of vol. We are at 0. And now the question is, will it go back up or will it stay at the floor? So volatility stay at the floor. And sorry, I'm trying to zoom out. Yeah, like here, we stay at the floor and trade just go back, just go down. And what you get when volatility just stay at the floor is the asset to go up. So for now, we don't know. I mean, there is no way to know for now if it's if it will trend or if it's just a one-time event like here and here. And but if we get a trending vola like here and like here, yeah, you should expect it to rise. So my bet is yeah, it's the same as before. I can see that the Fed doesn't want to hike. It has to hike, but it doesn't want to. So something has to force them to do it. And seeing what happened on the US oil, seeing the announcement from OPEC, etc., trying to, my guess is they are trying to force the Fed to do it, right? I mean, it's war. They are doing economic war. Yeah. So my guess is I would expect the vola to stay at floor level, and either US oil just don't move and it's stuck there, and at some point you have trade that is so low that vola has to rise up, and then it's just a good opportunity to short, or matrix will recharge somehow, like here, and you get the next leg up. So for now it's impossible to say. The move was from here to here. Now once we have made the move up, shall we go up? And my assumption is, again, the Fed will be forced to raise, and the trigger could be commodities. US oil could be one of them. I don't know if I answer your question, but yes, that's the only way I can tell you.
Yeah, no, I appreciate it. That's great.
If we have another week of vola at floor, it will be easier. It will be easier to answer. As for US oil on MF4, I can use USO. The long-term upside is very limited. The short-term upside is high, but the problem is USO is quite volatile. So yeah, you can see it's capped. Like Bry would say, the top of the range short-term, top of the range long-term is basically the same. So a good spot to short would be 76.8, or to get out if you have a long would be around this price. Yeah, but yeah, it's bullish trend. Earth is actually quite strong and increasing. You can see. So I guess it's a good long. It's just it's not going with the consensus, right? Everybody now wants to short US oil based on the fact that we are entering deflation, etc.
Thanks, that's great. Thank you.
Sure. Nothing else, guys?
No, actually, from my side, I knew that after this market action last week and this week, I knew that basically I will just come and say, well, correlations are low, risk is not picking up, I need more signals, and I'm just sitting and waiting. So now I have nothing to say.
Yeah, I received a lot of questions about the process and how to use trend, to some people I replied that trend matters when you are in a trending environment. And for instance, you had most of the equities were screaming, please long me. So of course, if you are shorting and then you are like, I don't understand, it's going, it's ripping my face, expecting some kind of mean reversion, while you have a trend, a bullish trend, you have earth strengthening, you have the correlation that are not indicating that there is any risk in the market. Of course, it's gonna go up, right? So I would encourage people to watch the show that you guys did 2 weeks ago, which was, I mean, it was spot on. The correlation was really well explained, especially Brian nailed it. So I would suggest you go back to see this show and focus on what the guy said about correlation and why they matter at some particular point more than anything else.
Yeah, and also I noticed from some comments and the messages, and Rafi, you and I, we were talking about that people are, saying that some people are basically only trading trend. If it's bullish, it means buying. If it's bearish, it means I'm shorting. And then sometimes they're caught in a job and they lose money. So first of all, first thing that it's a combination of tools. It's a combination of process. Process has different steps, and everyone must create a process which has multiple layers in it. So you can't just use one thing like a trend, for example. Oh, it's bullish, let's buy, and oh, after 2 days it's not bullish anymore. Oops. I can encourage, and I did a video about that. I believe it's on my channel. I'm doing a poor job making new videos on that channel, but yeah, maybe one day I will make new ones. But anyway, there is a video about Hurst exponent. So how to trade trend, only trade trend on assets that have high Hurst exponent. And it's very easy to spot those things because if Hurst is going down and is relatively low, and in that video I even told the approximate levels, how I think what is low and what is high during different time frames. But if Hurst exponent is high, trend performs better following trend, and but when Hurst starts to decrease and becomes lower, you will be caught in a chop one day or the other. So yes, and you said it very well. Correlations matter, Hurst matters, and having a process which has multiple layers in it matters, because if you ignore, for example, upside downside ratio in a range, if you ignore momentum signals and ignore correlations and just place a trade just because yesterday it was neutral and today it's bullish, well, in the long term, in the long run, it will not work out very well. So yeah, but for those who are not familiar with Hurst exponent, I have a video on my YouTube channel. I believe it was first or second video I ever did on that channel. So, and also I have videos. They're very repetitive. So basically, you can see the pinned video on my Twitter. I believe it's a pinned post where it's a like 1 hour long video where I explain my process. So basically 2 videos. One is about Hurst exponent, another is about that process, and you will and maybe it will help. But because I agree, trend is very important, but people make a big mistake if they only trade using trend, for example, or if they trade just using one signal which is based on one thing. So yeah, that's my point of view.
Okay, I check again if there are questions or not. Do you use OVX? No, I don't. So I may look at it, but I don't. I design my own synthetic volatility to follow an asset. So I use VIX because I like to long the VIX through some products, but yeah, I seldom watch any volatility tickers. So no VX. Gold, silver, any insight? So today was the perfect day to troll Brian, but he decided to bail on us. So so I don't know. Do you guys have any take on gold? I remember Vi, you mentioned maybe 2 weeks ago in the previous show. I was not there. You said it's a bullish trend, big earth. It's looking very nice for long. I don't know.
Yeah,
has it
and
changed or
I mean, yeah, and it went up slightly from our previous show. Well, actually, not that slightly even, but no big changes. So Hearst is going down. It's still relatively high, but it's not as high as it was, of course, 2 weeks ago. So it was close to 0.8. Now it's 0.75. So you can see the actual trend that Hearst is going down. But yeah, of course, it's still bullish trend. So it depends on the intentions of the person who is asking. So I will say this: if you want to short it, no, not yet. If you want to long it, maybe you needed to do that weeks ago. So yeah.
that, Matteo, any take on gold or silver?
I don't follow commodities very closely, but usually the simple fact that the dollar is going down is enough for the gold and silver to go up. And the same as other currency-like commodities such as Bitcoin or crypto in general. Basically, all the trade there is just the dollar going down. So unless the dollar reverses and start to go up, I mean, the path for the gold and silver is to continue to increase, in my opinion. But I don't follow commodities very closely.
Yeah, I
Yeah.
follow gold as well, and I've been an owner of gold since November timeframe. I have cut my position on each consecutive increase. I've not found a good spot to buy or add to the position. I remain bullish, but find it super overbought right now. And so I was a seller on one of my other accounts today as well.
Yeah, I just wanted to make a quick mention that yeah, my biggest advice for the person who is asking would be also follow gold silver ratio. Sometimes it will tell you more insights about what actually is going on when just following gold or silver price itself. Yeah, that's what
I mean, look at gold, look at the Swissy, some of the other currencies. I mean, they all look the same, and it really is a negative dollar situation. So,
yes.
You know, buying dollar was clearly a contrarian move today. I hope it works out, but I don't know.
Yeah. Somebody actually asked me in private when I said I was shorting euro. He said, "Oh, you're finally shorting Bitcoin." So it's a joke, right? But it's a good question because, like Matteo said, everything correlated to dollar is just ripping. So yeah, I mean, we are done. Some questions were about correlation, but you addressed them, right? So no need to go through that.
Yeah, and again, because yeah, so sorry about it. Yeah, again, I will repeat that because I mean, both you and I, we receive those questions all the time. So yeah, I encourage you watch those videos on Process and Hearst. I will tweet links again on just for if you can. One is pinned, another I will make a tweet. But I hope that answers more questions because. Every week I receive the same questions: how to use correlation, what it means, what is Hearst, and so on. Yeah, so I encourage you watch those videos. Sorry, Raf. So yeah, continue.
Yeah, I mean, we're okay. So you want to do a bet again? Did you do a bet 2 weeks ago?
To be honest, I don't remember. I think we did. I think we did, but I have no idea what it was.
Okay.
It's in the chat for sure. Wait, I believe. Wait, maybe quickly I can find it. Maybe. Wait. Okay, where are we? April 1st. So it's approximately here.
Pretty sure it was Brian saying we would go to VIX 17 or something. He was very confident.
Maybe, yes. When was our last show? April 1st?
Yeah,
No,
should be in this.
March 31st.
No, April 1st is not possible. Should be March 29. Sorry, 29 or 30.
Okay.
It's okay, man. Don't worry about it.
Yeah. I have no idea what that was. I'm sorry.
Okay. So you want to do one maybe about stock bond correlation, or I mean,
Sure. What bet you want about stock bond correlation?
Let's go with that. Will stock bond correlation go back to very highly positive by the next show in 2 weeks?
On what time frames?
5 day.
5 day.
Yes, it's very tough call. Let's say 5 day plus 10 day. Let's do the.
Yeah, so now it's negative on 5 day, and you want it not only to be positive but extremely high.
Exactly, yeah. 5 days. Let's go with 5 days.
Okay, let's go 5 days. Positive but not extremely high, no.
Okay, guys.
Okay, I found our bets. Okay, now let's make our new bets, and then I'll say.
So Vice is going to be positive but not high.
Not extreme, yeah.
Not extreme. So getting ready for the next leg down is Vice's opinion, okay?
Yes.
Status quo.
Sorry?
Very little change.
No, little change.
Maintaining.
Okay.
Matteo?
Yeah, I think it will be positive. Doubt it will be extremely positive. Just positive.
Okay. So in Vice camp, okay. I'm gonna stay gregarious and go with you guys, with
Yeah.
and Matteo. Okay.
Yeah. So 2 weeks ago we made 2 bets. So one was Euro USD in 2 weeks. And actually, Brian lost and I lost. So Robbie won. Basically, Euro USD in 2 weeks. Brian said it's 0.74. Well, 1.07. Well,
Okay,
you understand. I said also 1.0708, something like that. Robbie said that it will be 112, so higher. But yeah, it's not 112, but Robbie said it will be higher. So
Yeah, nice.
yeah, and Chris was also with us, so he said lower. So Robbie won this one. And another bet was CL, so oil in 2 weeks. I said higher at 79. Robbie said lower at 70. Brian said higher at 77.15. And Chris said higher at 74. So we can
Brian
check.
Brian won.
Brian
Is it
said,
USO
yeah,
or WTI?
I believe it was
Or
current.
It's futures.
Yeah, it's futures.
futures?
Yeah, so 1, 2, 3, 4, 5, 1, 2, 3, 4. Yeah, so it was actually no. So I don't know which contract we had, because now current contract is 82. I said 79, but yeah,
Okay.
so
Survival.
Brian and I were closest anyway. Doesn't matter. Yes.
Okay, guys. So yeah, we're good. Yeah, let's hope let's hope we get some risk building by the next 2 weeks, and yeah, we shall see.
Yep. So if there are no more questions, so Yeah, so
Nothing.
I hope next 2 weeks will give us better opportunities because you all know that majority of people in this camp, maybe except Brian, are not very happy when markets are going up. So maybe we will have more opportunities. Manage your risk well. Patience is key in this situation. No need to be a hero. Okay, so thanks everyone. So thanks Matteo, Ted, Raphael. Thanks everyone for watching. If you have any questions, always feel free to send us those messages. And and I hope this show was helpful. See you in 2 weeks. Bye everyone. Bye.
See you in 2
Thank you.
weeks. Thank you,
Have a
guys.
good one.
See you in
Bye.
2 weeks. Thank you.